everyone for coming today, setting aside the time for this most important topic. There will be time for questions at the end of the presentation. There are two housekeeping items I'd like to call your attention to. On your dashboard, you will find a questions section and a chat section. Throughout the course of the presentation, we will post a couple of links in there that you can use. Be sure to grab those and paste them into your browser as appropriate. And we'll do the question and answer towards the end. So without further delay, I am Dave Grimm with Direct Source Wealth. I'm the Director of Investor Development. And today we're partnering with Ader Financial, who also specializes in note lending, to kind of go over some of the terrific features about what happens when you combine note investing with IRAs. So I'd like to introduce Patty Ped of Ader Financial. Patty, go ahead.
Welcome, everyone. Thank you so much for joining us today. I'm very excited to talk to you about some hidden truths that nobody tells you and how you can invest in notes using your IRA money and earn double-digit returns. Just a little disclaimer here, the material available here is for informational purposes only, and we are not trying to give you any kind of legal advice. In order to make any investments, you should contact your attorney who can give you advice with respect to any particular issue or problem. Just a little bit of background information about who we are. Ader Financial is a nationwide private mortgage investment company. We deal with distressed mortgages, also known as notes. Our main mission is to achieve high returns for our investors while offering homeowners unique solutions for their mortgage difficulties, and also helping lending institutions by liquidating their non-performing or non-accrual assets. We invest in notes or distressed mortgages because, unlike real estate, they are a great source of passive income. They offer high cash flow, protect our equity from market volatility. There's a lot of versatility in the way we deal with notes, and most of all, they are secure. They are collateral backed, and they are very easy to maintain. We have a power team that we work with. We work with investors, banks, realtors, and many other members to create win-win situations for everyone involved, especially our potential joint venture partners. We offer return on investment, which are about 8 to 12%, which is much higher than what you would expect in a traditional investment. Next, please. And now I hand it over to Dave.
Hello again, and for those of you new to the call, Direct Source Wealth is a direct investment real estate wealth building opportunity. We co-invest alongside of our investors, primarily in commercial projects. Multifamily has been our bread and butter, and we are diversifying from that. We offer cash flow opportunities in the form of note lending, equity partnerships, which offer cash flow and growth, and work very specifically to help people understand where those strategies fit in and provide an opportunity to grow your wealth in a controlled and predictable manner. So to move forward on that, the first hidden truth on note lending and IRAs is, what is a self-directed IRA? How is it different, Travis Index? IRAs are simply individual retirement accounts. A lot of people have a 401k at work. When they leave, they may be able to convert that to an IRA. An IRA often is held at brokerage houses like Schwab or Fidelity or TD Ameritrade, and you're limited to those particular investments in those particular brokerage firms. So the self-directed part comes when you either move it to a custodian or become your own custodian, as the case of a checkbook IRA might be, and start investing in some things that you are more aware of. Real estate's obviously very popular for that, but so is gold and other non-traditional investments. So virtually any type of IRA can be self-directed. So you've got your traditional IRAs. Patty, I'm going to let you take this slide. Hello, Patty.
Hi, sorry about that. So many of us have invested in stocks, bonds, and mutual funds before, but not many of us know about legally allowed high-yielding alternative investment options. Since the inception of IRA in 1974, investing in alternative assets has been allowed by IRS, and it is completely legal. Over the past several years, buying these asset classes has become very popular, mainly because there's so much uncertainty in the stock market, and the economic uncertainty is the world economy. People just don't want to limit their investments to stocks, bonds, and mutual funds. So there's many different kinds of IRA, and mostly the main ones that we see are traditional IRAs, Roth IRAs, and simplified employee pension, or the SEP. There's Simple, which is a savings investment match plan for employees that is usually offered by your employer. And we also have solo 401k plans. And not many people know this, but you could also use your health savings account or your CISA account, which is the Coverdell Education Savings Plan, in order to make an investment. And the term self-directed is actually applied to all of these types of IRAs. Self-directed means that you get to make the investment decision by yourself, and you're not limited to the typical stocks and bonds and mutual funds. People are seeing a lot more opportunities in these alternative investments, and that Wall Street's idea of diversification was false and very, very dangerous. You can not only invest in the main asset classes like stocks and mutual funds. With SDIRAs, you can also actually invest in rental properties, notes, private stocks, LLCs, tax liens, apartments, raw land, private lending, and the list is really big. Self-directed IRAs give you complete freedom and control. That you can gain access to a huge range of alternative investment options, and these are not offered by traditional banks and brokerage firms. The IRC code states what investments are prohibited, and all other types of investments are permitted, as long as the IRS rules governing these retirement plans are followed. So you have the freedom to create your own portfolio without any limits. Dave?
So, hidden truth number 2, the benefits of investing in notes and real estate using self-directed IRA. The range of alternative investments, Patty just covered a portion of it, but it's really very few restrictions associated with it. So you get to invest in something you know and understand. Travis, next slide, please. You get to invest in something that you know and understand. I was at a self-directed IRA seminar earlier this year, and one of the people there actually spent most of their time investing in horses. They knew breeding horses and thoroughbreds and what it was necessary to get a horse into the Kentucky Derby, and they were able to turn a profit on it where most people aren't in that environment. So as long as you're not investing in one of the restricted items or with a restricted person, the limitations are considerably reduced, and you're allowed to work in an environment that you are educated in. Not all of us are educated on Wall Street investments. Not all of us are educated on real estate, but some people can be educated in different fields. Consumables such as wine, life insurance, just to name a couple, those things cannot be there. So the ability to invest in an IRA from a real estate perspective and from a note perspective allows you to truly diversify your portfolio. Travis, next slide, please. And by doing so, you're able to start mitigating some of the overall investing risk that you face out in the world. Whether your concern is what's happening on Wall Street right now, the Dow's at an all-time high, and maybe it stays at an all-time high and maybe it doesn't, or maybe you just want to go down a different path, whether it be note lending or real estate, and then you can diversify within that path as well. But the point being is that by working in a self-directed IRA, you can do these things. You can put your retirement in your own hands, and you can balance out a portfolio which had been limited to the investments that they told you that you had to do, into a new environment, a new, much more controllable environment. This helps eliminate volatility. This helps eliminate perceived volatility. Travis, next slide, please. And it also provides the ability to invest in things like cash flow and growth opportunities, which are both associated with note investments and real estate investing. Take some of that up and down out of Wall Street and put it into a consistent monthly cash flow. Take some of that portfolio allocation and put it in different forms of real estate, whether it's note investing or equity investing or development projects or storage areas, and diversify within your diversification. Next slide, please. Bottom line is you are protecting the nest egg that you built for yourself. You've had all these years to build your retirement plan. You can grow those retirement plans within the IRA, but it's absolutely crucial that you protect your principal. So return on your principal. This is a key component of direct source wealth. The return on your principal is not as important as the return of your principal. And investing in things that you know and eliminating volatility and proper diversification strategies all allow you to be as predictable as the world would allow. Travis, next slide, please. So a couple of different main categories of IRA, one of them being traditional and one of them being Roth. And these two offer significant differences. A traditional IRA, you contribute funds to on a pre-tax basis. If you're still employed and you're contributing to an IRA or a 401k, you're used to seeing that deduction from your paycheck before federal taxes are assessed on that. So the traditional IRA reduces this year's tax burden and allows you to grow within a tax-advantaged environment. So because you're not being taxed every year on the gains within your IRA, that growth can compound at a more accelerated rate. Upon which, at the point of 59.5, you can start taking out funds of your traditional IRA, and you are taxed in those on that withdrawal at that point in time. So traditional takes money out pre-tax, taxes you upon your withdrawals. A Roth, which I believe everybody should have because it's one of the most amazing vehicles ever invented, allows you to currently contribute after-tax dollars. It still grows tax advantaged, and when you take down your gains at 59.5, they are not taxed. A good investment strategy that a lot of people use is a combination of both accounts. And this allows you to do effectively what's called laddering, and that is decide when you get closer to retirement which ones you want to take down first. Perhaps you're still earning money at age 60 and you want to take down money that's non-taxable. You could start taking your Roth first, and at age 70 or 75, after you've depleted your Roth, maybe your tax basis is a little bit lower and you can start taking down traditional. There's all kinds of planning methods associated with the two structures. And Travis, next slide, please. And that's all I'm going to talk about on a very high level, because I'm not a CPA and I'm not an attorney. We are just people that have been down this path and worked in the self-directed IRA environment for a long time on a large number of transactions. So please take what I say, check it out, get with certified wealth planner, certified financial planner, and make certain that the strategy you're working on is appropriate for you. Travis, next slide, please. Should be on taxes are the biggest expense. Here we go. So I've touched on the way the tax structures work. And by growing in a deferred environment, you are able to properly get a handle on how you want to minimize those taxes. So the next section, tax advantages of IRA, moves into how you recover on the deferral. Do you recover after 59.5? Do you set it up later? All of that's part of the financial planning. But I've kind of gone over tax-free and compounding advantages. I hope I've explained Roth very well at this point. So let's move on to note lending and equity. IRAs, a self-directed IRA in particular, one of the key components of that self-directed IRA is that if it loses value, it could become a taxable event. You want to make sure your IRA is always staying stable or growing in value. And knowing what you're getting into, whether it's note lending or equity deals, is necessary in order to make sure you are investing with the right vehicle. So for example, a 1099 is taxed differently than a K1, which is taxed at your capital gains rate. Both of them have advantages and disadvantages in terms of your financial services and your financial planning, but typically a note lending investment pays with a 1099 and an equity investment pays with a K1. Also, there are some limitations as to what amount of depreciation you can recover within an IRA. In most cases, if you have had a gain in your IRA via K1, you cannot offset more than that gain with the depreciation. There's also issues with K1 earnings within IRAs that you'll want to make sure you understand a term called unrelated business income tax. And if you're investing into an equity deal with an IRA, be sure to ask a professional about UBIT, because it could be a rather unpleasant surprise.
So let's take action today. ADA Financial joint ventures with individual, institutional, or IRA investors on a regular basis. In a joint venture, usually the investor funds the asset purchase, the workout costs, and the ADA Financial handles the brunt of the work. We handle the asset sourcing, we do the workout management, and ultimately we also do the sale of the asset in order to capture the investment gains, which are then split between the investor, which would be you, and us. We work with both passive and active investors who would like to learn with us. So it's like learn while you earn. And we give you free training so that you can learn how to invest in notes using your own money and go back and fund more deals and make more money with us. We also provide the best deals. We perform feasibility analysis. We have detailed documentation about each of the deals that we're working on. And we also offer the best part, we offer double-digit returns for everyone. We also have a free consultation for everyone who is interested in learning more about note investing. You can call us today and talk to one of our portfolio managers, and they will be able to set you right up.
I'm adding to the chat bar right now. Be sure to copy these links. And set a time. Talk with one of our relationship managers. Oh, is that right? There we go. DSW employs what we call relationship managers. We are looking for investors that want to have a long-term relationship. We want to know each other. We are aligning our interests by investing in the same things that you do, but at the same time, we want to know what you think, how you think, and to be able to work together to find solutions to grow predictably and safely. So to that end, we have a function on our team called relationship managers. And it's an awesome function where you end up working with the same person for as long as you want to work with that person. So the link there takes you to a appointment scheduler that allows you to set a time with a relationship manager at Direct Source Wealth, get involved in a strategy session, get going with an outline of what your financial goals are and how we can align our interests. Travis, next slide, please. Oops, I'm sorry. I was looking for the bonus slide there. Apologize. So, as a free gift, there is another link that you can go to and download our booklet specific to creating wealth within your IRA. We do recommend this. It's quite the tool. It's been reviewed by several additional custodians and recently underwent one heck of a facelift. So grab the link from the chat bar and go visit directsourcewealth.com. With that, I want to open it up for questions. On that, Todd, you got your note here. IRA is actually individual retirement arrangement, not account. Thank you for that correction. I appreciate it. You are 100% correct. So looking at the questions, Bob, good overview on SDIRAs, but what's the core info on notes? What is the program for investors? Are you Reg D fund or just reselling assets? Core info on notes. We have a couple of different note opportunities within Direct Source Wealth. Going over individual opportunities would definitely fall under a relationship manager rather than what we're talking about here. This is an overview. The program for investors is to work together to find whether it's a note lending opportunity or an equity opportunity and make sure we're partnering up for the long term. We do have a Reg D fund that we're working on, and we do have direct investments. Patty, I'd like you to answer that question as it pertains to Ader Financial, please.
Absolutely. Thank you, Dave. So Bob, so when it comes to investors, like I mentioned before, we do joint ventures with them. Our investors usually provide the funds for the asset purchase and we have an estimate on the workout cost. So that's what we would seek from an investor. And Ada Financial would then handle all of the workout management. We would contact the borrowers. We would convert the non-performing note into a performing note. And we would also distribute or disperse the assets on a quarterly basis. So there's a large variety of ways in which we can work together. If you wanted to be an active investor, it would be a much more interactive and documentation-oriented and not education-oriented process. So you can give us a call right away, 267-571-6119, and I would be more than happy to talk to you about the investment strategies and how we can work together. Thanks for the question, Bob.
Daniel, how does a self-directed IRA differ from a self-directed 401k? I am glad you asked that question. Self-directed, the biggest difference between the two is your contribution limits. Self-directed 401k, typically called a solo 401k, can actually, with a proper business structure, contribute right around, and I don't have the exact number in front of me right this second, but right around $50,000 a year toward your retirement planning. This is critical because a lot of baby boomers are coming up on retirement and have suddenly realized that, hey, wait a minute, I've got my business, I've been out here being very successful, and I really didn't do anything for retirement. And the typical IRA contribution is so low that it's designed to take 20 years before you get there. So the solo 401k is a huge benefit to the self-employed in that environment. Patty, do you have anything to add to that?
No, I think you've covered it pretty well, Dave.
Thank you. Scott, welcome to the call. Are your notes typically first position or second position notes? Within Direct Source Wealth, the note that we are offering right now is a first position note. Patty?
We do both first position and second position. We're actually one of the very few companies that does that. We have a team specifically that deals with second position notes because the strategies, the exit strategies that you would use for both of them are completely different, and the borrower management and the risk management perspective also, and even from the due diligence perspective, they both differ a lot. So yes, we do deal with both of them, and the investment amount and the strategies greatly differs depending upon what deal you're looking at.
Do we have any further questions? Patty, do you want to close it down?
Sure. Yeah, so we have been investing in notes for a very long time now, and we have seen tremendous improvements in how the notes are, or in how we deal with this. And I would personally suggest every one of you to start investing using your SD IRAs to invest in it, because the benefits of it are tremendous. And note investing, not many people know about it. So but the supply of notes is unending because there are a lot of distressed mortgages out there. There are a lot of non-performing notes out there. And this is one of the very few investments that can provide you with double-digit returns. So I would advise everybody to start learning more about notes, trying to learn how you can do your due diligence properly so you can limit your risk and start earning the benefits of it.
Last of all, I'd like to invite everyone to reach out to us at Direct Source Wealth. Take advantage of the complimentary strategy session. Connect with one or more of us, as the case may be, and get your questions answered. We've got a team that's got an excellent cross-section of real estate and financial experience, and we're very proud of just what we've been able to put together in the first 2.5 years of Direct Source Wealth, as well as looking forward to offering a spectacular 2018 while closing out one more opportunity in 2017. So please get us on the 844 number, click on the appointment link, send a carrier pigeon, whatever works for you. But let's get that conversation moving forward and get those questions answered. Thanks everyone for being here today, and we'll look forward to seeing you in the near future.